G'day there everybody right around the world. Thanks a lot for tuning in and watching this weekend market update. What I'll do, I'll recap what has occurred over the past 4 trading sessions and take a quick look at also some wider markets just to understand and unlock some of the sentiment which is occurring up and around these historical highs. I'll begin with the Dow Jones. We'll speak very briefly about the S&P and the NASDAQ also. I want to share with you some of the movements, the price action which has also continued with gold and silver, and then take a very quick look at the US dollar as well, right around that macro support area. But let me begin this conversation with the Dow Jones Industrial Average. If I change to the weekly chart, you can see that in the top right hand corner of my screen, we closed up 64 points. We were left with, if I can zoom on in and show you this, another high wave spinning top type of candlestick. So again, it is reflecting, or it does show a little bit of indecision around current price levels and what is occurring up and around this recent breakout that we've seen on the industrial average. Now, the week that it has been a rather stagnant type of week. We haven't seen a continuation to the upside, nor have we seen any material breakdown or pullback down to our green area of support. Now, if we do see this pullback actually occur and continue into next week, if we do see some selling pressure, this box on my screen right here is going to act as some very strong macro support for a number of reasons. First of all, you've got the rising 100 simple moving average, and you also have that rising 50-day exponential moving average. So we're getting a confluence, or what I like to call an X marks the spot, so to speak, on the chart, where we're seeing varying levels of support or buying locations that a lot of active market participants will be identifying as their next opportunity to start opening up some longer term long exposure. Now, it doesn't mean that we have to pull back down to this green box. We can see the market just as easily break above Tuesday's candlestick over here, Wednesday's candlestick. Let me just get that correct. Now, on Wednesday, intraday, it was looking quite healthy. We had this upper wick which was developing what was to be a long white day candlestick. However, we started to see the sellers come back in. This is Monday. Let me just get the right candlestick first of all. But then again, on Wednesday, after the US Independence Day holiday, we saw a hangman type of candlestick at resistance, and then we just saw a little bit of a pullback. Friday, we continued to stabilize. We closed up 94 points. But again, if you just look at this in terms of just a very simple illustration, it looks as though we are moving sideways in some sort of a square, if not a sort of tighter rectangular type of resting type of pattern, whilst, of course, those exponential moving averages come back up and start to interact with price. Now, the S&P 500, the same is true for this. What I spoke about just then with the industrial average is very applicable to the S&P 500. Now, again, we're looking at this rather neutrally. We have seen this pull back or correct a little bit more so, or at least in percentage terms, more than the industrial average. However, again, on Friday, we were left with a one white soldier, a very bullish continuation signal, and it is occurring very close to that location on the chart where this type of pattern makes a lot of sense. So just to condense this down again into a couple of sentences, let me just rearrange the charts on the left-hand side of my screen. We are still intermediate and also long-term bullish on the market, but we are open-minded enough to allow for the market to pull back down a little bit further if it wants to come back down into this green box, which we haven't definitively touched. You can see again, I'm just reverting back to the industrial average. The NASDAQ again, pulling back ever so slightly. If I go to the weekly chart, you can see again, we closed positive 12 points. The candlestick color, however, is dark, and we are left with a sort of hybrid hangman and also hammer. Not really at any identifiable area or specific location. We're sort of between resistance and also support at the moment. We're in sort of no man's land. We're halfway, so we can't really take away all too much from that weekly candlestick, other than we are still seeing a little bit of buying pressure right in the middle of this range-bound type of price action that we've sort of been in since the top in early June, but also since support was established in mid-May 2017. You can see that we're right in the middle of it. So it's best to approach the week upcoming relatively neutral on the very molecular or minor level of the trend itself. Now, if I continue this discussion, this is where it gets interesting, and you should be paying attention to this. In the world of analysis, and when we start bringing other elements together, other technical factors which we can sort of combine to help us understand just where we think price action might move to in the future, there's this theory which we call Dow theory. And one of the tenets, of course, between the transportational average and the industrial average is that we want to see the markets confirm. Now, this is a really good sign. They were diverging away from each other. So if you think back to May and June, we saw the transportational average come back down to support, whereas the industrial average was still continuing that bullish bullish rally. Now, since then, the transformational average, since hitting macro support down here just under 9,000, it has more or less over the past 2 months gone parabolic. We have on Friday just closed above the swing high dating back to March 2017. If I zoom out and show you this, we're now printing at new historical all-time highs. So this is the chart. This is going all the way back to 2008, by the way. You've got the low of the GFC in 2009. This has been the long-term upward trend line. And you can see even towards the end of 2014 into the beginning of 2015, where the market went through a pretty severe correction, as at the current juncture, we are printing up into fresh new all-time highs. So this is alerting us that the industrial average should follow suit. It doesn't have to, but what we would assume to be the case is that if the transportational average is breaking to the upside, generally it is a leading indicator compared to that of the industrial average. If you start to see the transportational average break down or diverge away from the industrial average, there's a very high probability that the industrial average is going to follow suit. So generally the transportational average of the two markets is the first to confirm the sort of intermediate trend, whether that is a continuation of the larger upward macro trend, or in fact, if it is setting up some form of a correction back into the long-term macro trend. In this particular instance, obviously you can see in my chart, we've sort of bounced already off from this green box and we were up 118 points on pretty, average, ordinary type of volume. It wasn't elevated, nor was it small. But it was just a daily sort of average type of volume that we do like to see, or we are used to seeing on the transportational average. So this is something which is also important, and it also paints a rather rosy sort of outlook for the industrial average. So we're approaching the week upcoming, very neutral. However, we still have a longer term outlook that these markets are going to continue, whether or not you personally agree with it. Now, continuing the discussion also, if I just bring up gold and silver, they have definitively broken down once again. I've spoken about this over the past couple of weeks. We had a 119 short, a 118 short, and a 117 short. We hit our first target, and I put a video out on Monday, 116.44. We hit it. We stabilized short term. This was our support level. But on Friday, we saw another gap down on pretty elevated volume. And I mean, you can see we're sort of interacting with that 115.04 entry at the moment. So I mean, we're out of this trade, or you should be. I mean, if you were in it, you should have at least taken some of those positions off. What's interesting to note is that since December 2016, we've had a low, we've had a higher low, and a third higher low, or third consecutive higher low. What's interesting now is that we have definitively closed below the low, which we have established in May 2017. So where we are at 115.28 is below the low where we were in May 2017. On top of that, I've been speaking about this in sort of lengthy discussions also, is that we've had this long-term bearish downtrend, and this is still in effect at the moment. I mean, we've come up on two occasions, most recently in 2017, and we've both failed at this location. So it looks as though gold is particularly weak. Silver also has just hit our second target. So I mean, we had a short here at 15.92. Again, we hit our first target. This was on Tuesday. We blew through that, and on Friday we closed below our secondary entry at 14.90, all the way down at 14.73, down 42 cents on the silver ETF. So some pretty decent selling occurring on pretty elevated volume for the commodities, which doesn't come as a surprise based on what the chart is doing. If I bring up the US dollar index, this is something that I've been speaking about also. We've been looking for this to more or less turn on a dime and to show support around this macro support area. Now, I put out the video on this particular candlestick, and there's the opportunity to still go long above 96.40. It looks as though we're just setting up structure. So as long as we remain around this location and don't break down below it, these oscillators are naturally going to recalibrate and move back towards the upside. On top of this also, we've got building positive divergence, or what is otherwise known as bullish divergence, between these consecutive lower lows, but also the divergence which is taking place on the MACD. All right, so please think about that also. It truly looks as though the US dollar is going to strengthen over the coming months. Okay, and that is obviously going to place downward pressure in terms of purchasing power for that of commodities, or commodities priced in US dollars. Now, just to sort of vaguely interact or speak about our top 12 individual trade list, you have to keep in mind what is occurring on the overall markets. Now, I was surprised a couple of days ago where two stocks in particular triggered. That came as a surprise because personally, I wasn't expecting them to trigger. Now, what's happened is that they have pulled back, they have retraced. The good news is that in line with our suspicions on the market, market. And again, the directional, or at least the direction of price action, the direction of both the intermediate and also the macro trend, because they triggered a little bit prematurely, they're obviously going through or transitioning through a little bit of turbulence. They're going through market noise. Now, this is going to occur until the market stabilizes around this location and until we see the next next upward sort of price action movement, which is obviously going to flow through to a lot of the stocks which have sort of been flirting with a lot of those bullish triggers that we were speaking about over the past week and over the past couple of weeks. Also, on top of that, we saw the Baidu trade not actually play out, which was a surprise to me. So I personally got stopped out of that trade, which is a little bit of a kick in the gut, so to speak, but I will reference that in more detail in the pro analysis class. But again, you need a little bit of patience and discipline up and around this area, just as the market sort of feels out itself or really sort of, comes to some form of a short-term agreement on price action. Whether or not the buyers or sellers win out, that's anyone's sort of guess at this particular moment on the minor level, but certainly on the larger levels of the upward breakout across these markets are still healthy. They are still very favorable, more so on the intermediate, but most definitely on the macro level as well. So I just wanted to sort of recap that. I think I've spoken about what I wanted to at least recap in terms of market price action over the past 4 days of trading. I wish you all an enjoyable weekend. I'm going to sit down now and record that pro analysis class. Have a great weekend, everyone, and I will be back with you next week to recap some of the movements in the markets and potentially individual shares as well, if they do throw off some interesting signals, much like gold and silver and also the US dollar, which has been one of our primary focuses over the past 1 to 2 weeks. All right, so on that note, everyone, I'll say goodbye, and I'll see you in due course. All right, it's James signing off on behalf of Pivot Point Trading. Goodbye.